Hi everyone, my name is Theo Theodoru. I'm a certified financial technical analyst, and in this video, I will navigate you through the most tradable pairs. I will explain you the key technical levels, the major news events for the week, and how you can implement them in real time. Let's start with the Euro-US dollar. On the weekly time frame, the price remained as another inside candlestick. 1, 2, 3, the fourth candlestick in a row included within the boundaries of this bearish candlestick. Overall, based on this schematic now, the market has bearish implications, but as you see on the daily chart, everything locates within this bullish engulfing. Market structure, non-existence here. All these candles are inside candlesticks. The market is indecisive and it just hovers between support and resistance. Nothing significant. The lower the time frame, the more obvious the trendless market becomes. The price trades within these boundaries, support at the bottom, resistance at the top. What we want to do, wait for a clear breakout of this resistance and then start looking for long positions. If the price breaks outside of the support, then the next area of support becomes this level there. If the price goes further down, the next one will be between 1.14 and 1.1360. For as long as the price remains within this consolidation, we don't consider the trends as high probability ones. Rate British pound against the US dollar. Last week the price closed as an inside candlestick. It left a long lower tail at the bottom, but without any clear direction. On the daily time frame, the bullish engulfing was the leading price action from last Friday. Since then, everything stalled within the high and the low of the engulfing. This week, if the price breaks above the bullish engulfing's high, the first resistance area becomes this key level here. If the price continues going further upward, the next strong area of resistance will be the 1.37900. This one here, it will be an intraday resistance, not a strong resistance, because it's not a significant swing high, so we expect a break above this resistance. On the other hand, if the price breaks below the support, we will use every daily's low for intraday support. On the 4-hour chart, here the price consolidates our support, one here, another down there, and the last support here. Trading on the hourly time frame, 15-minute charts or any lower time frame, the price use these levels as significant levels. Same at the bottom. If we look on the left for resistances, they will use this one here. This is more accurate for intraday trading. The Australian dollar against the US dollar last week created a swing low formation, and that was enough to push the price to a new high. On the daily chart, the price formed these consecutive higher highs and higher lows, which has bullish implications. Support and resistance levels on the daily chart, consider this high as resistance, the next one, that one there. So if the price breaks above this daily's high, the next area of resistance is expected to be this one over there. On the flip side, for day trading, the significant support will be this low. If the price moves further down, breaks and closes below this low here, the next area of support will be down there. And the last one locates at the low of this candle form on the 23rd of June. On the 4-hour chart, the price form higher highs and higher lows. Higher highs, higher lows indicates an uptrend. There is still room to reach this high. If the price breaks below this support, clearly the next area of support is down there. You can use these levels for intraday trading as well, but the lower the time frame you move, the more support and resistance you need to in your charts. USD Japanese yen, it's consolidating big time here. No consistency with the bodies, no consistency with the highs and lows, swings, nothing. Very choppy market. We want to see the price away from this consolidation. If the market breaks outside of this consolidation, the next area of support for intraday trading becomes this one here, and the last area of support becomes this one there. There are a lot of lows right here. On the other side, if the price breaks above the bearish engulfing high and keeps going up, the first area of resistance and significant second one will be the 151. Pound yen, nothing happened last week. Bearish engulfing, reversal, didn't lead to any significant drop. Price remained as an inside candlestick. On the daily chart, the first sign of strength will be if the price closes below this bearish candle's low. Why? Because all the candles they followed after, they remained inside candles. Here we saw the bearish engulfing, and here we saw the inside candlestick last week. From this week, we expect a break above here. If a break above here occurs, next area of resistance will be there. If the break below this low, next area of support, the strong area of support will be there. On the 4-hour, break above here leads to the price over there, as I show on the daily. If the price breaks below the support on the 4-hour chart, the next support becomes the low right there, the other one down here. So you have two supports to use as targets. You can utilize these moves on the lower time frames, but remember, if you trade 15-minute, 5-minute, 1-minute chart, you need to add more levels. Gold surprises everyone last week, but if you watch the previous week's video, you would expect, we said, if the price stop forming lower low and it will form higher high, it will create a confirmed swing low, and that happened last Tuesday. After this break to the upside, the market reached this resistance. In this case, we want to see the price to either break and close above this resistance, and then we will target 3,500, which is the all-time high. If the price fails to move further up and move downwards, for day trading, intraday trading, every daily low becomes a significant support. That means on the 4-hour time frame, the first support will be down there, second support will be this one, third support there, fourth support there. There is a bullish engulfing order block C there waiting to be mitigated. If you are handling fair value gaps, there is an obvious area here where the market can move down, find support, bounce off and move upwards. Also, if this shallow uptrend continues, because the price formed higher highs and higher lows, this is the 61.8% Fibonacci retracement measuring from point A to point B, and it coexists with the broken swing high or the inside support if you prefer. There is a cluster of buying interest here. If the price moves downward, fill up the gap and print reversal price action here, it can consider a good tradable opportunity to look for further bullish continuation. Nasdaq on the weekly time frame, the price remained at the top levels. On the daily chart, consolidates with last Friday's bearish candlestick forming the swing high, higher high, lower low, confirmed swing high. If the price continues moving downwards, first area of support will be the low down here. The second area of support will be this low. Then we have another low there. Because these two lows are in a close distance, we can zone them and we can name them as supply because they are below the current price. On the 4-hour chart, it looks better. Here is the rectangle. If the price breaks below here, there is a lot of room for this support, that support, then we have this support. But if the price bounced off and moved upwards, first thing, it will be the filling of this fair value gap. If the price keeps moving upwards, there is a resistance up here, and that's the first strong resistance. The next one is going to be here, and the other is going to be there. This is relevant for the gold intraday. The Bitcoin is behaving as expected. Price last week formed a new lower low. It closed this is a bearish continuation candle. We expect this week the price to penetrate the last week's low and keeps moving further down. First area of strong support is below 100k on the daily chart. Here is the first support. For intraday, it's 105k. These are the first lower lows and lower highs. Retracement, continuation. We do expect further continuation to the downside. Trend line can be drawn across the swing highs. If the market moves all the way down, on the 4-hour chart, we can see the levels more clear. This is the first support, and that's the second support. So you have one support around 105k, and then you have another support around 98,500. Downward trend line can be drawn. On the flip side, if the price breaks above the trend line, the first resistance area, it's around 114k. If it bounced the previous swing high and keeps moving upwards, we can test 124,000. Regarding the news events for the upcoming week, on Monday in US and in Canada, the bank close, we expect minimal activity, especially during the New York trading session. Currencies like Euro US dollar, Sterling US dollar, Nasdaq, they will experience low liquidity. On Tuesday, during the Asian and London trading session, we do expect the price to behave and the markets to move in a normal way. During the New York trading session, the ISM Purchase Manufacturer Index is expected to increase by almost 1%, and this will happen in the US. If this happens and the market follows through, we can see some increased volatility on the US dollar, which can push the US dollar higher. On Wednesday, in Australia, they will report the gross domestic product. They expect an increase by 0.3%. If this happens and at the same time the Australian dollar follows through, the bullishness of the Aussie will continue this week. If you notice from the charts, the Australian dollar was the only one that had more bullish implications against the US dollar. So we can look for bullish continuation on the Australian dollar against the US dollar if this outcome is favorable for the Aussie. Next will be the Reserve Banks of Australia Governor Bullock speech. At 5 p.m. in the US, the job openings expected to decrease from 7.44 million to 7.24 million. This event, it's not able to change any trends in the market because there are more significant news events towards the end of the week. On Thursday, September 4, in Switzerland, they will report Consumer Price Index 0.0%. It's still expecting to be read. I'm a bit neutral on the Swiss, but if you are trading US dollar against the Swissy and you find some good opportunities here with positive events more than 0%, the Swiss franc can rise and it can push the US dollar further down. During the New York trading session in the US, they will report the ADP non-farm employment change. This is the pre-indication of the non-farm payrolls the next day. The expectation shows a drop in the number, and this can have negative impact for the US dollar. Unemployment claims about to remain the same, but ISM Services PMI, it's expected to increase by 0.4%. Also, as the number remains above 50, it has overall bullish implications for the US dollar, but increasing the number here will favor the US dollar, and usually this attracts a lot of volatility at the release. Traders tend to trade a lot around this event. The week will end on Friday. Significant news events will be reported during the New York trading session only. Employment change in Canada from minus 40.8k to plus 9.4k. This can have significant impact on the Canadian dollar. Unemployment rate, on the other hand, is expected to increase by 0.1%, and this is not favorable for the Canadian dollar. All eyes will be on the US dollar. The markets will get their final directions after the non-farm payroll report. The expectations shows something we don't usually see on the screen: 73,000 to increase only 1,000 new payrolls added in the US last month. Usually we have significant numbers here. So what's the deal? If the number of the actual is much bigger than the forecast, the US dollar is expected to explosively move upwards. On the other hand, if the outcome beats the forecast and the US dollar follows through, we're gonna see a lot of weakness on the US dollar. This event also can have negative impact for the US dollar if the actual number confirms the forecast. The unemployment rate is expected to increase by 0.1%, and this can push the US dollar further down. But what you need to be aware of, there are three major events about the US dollar. All of them, they will be reported simultaneously. If everything here prints green, then it's favor for the US dollar. If everything prints red, the US dollar is expected to fall down. If there are some green, some red, then we have to wait and see exactly how the US dollar position and then to look for trading opportunities.